If you own Tesla shares, what do you predict for its future? To this day, most professionals can't make heads or tails of Elon Musk's management style. Since Musk's recent scandals, Tesla stock has been extremely unstable. Consider this information essential before making any decisions on the stock. In this video though, I'll tell you what, according to Cathie Woods, could await us, we who believe in the enormous value out of Tesla and its incredible long-term prospects. Before we go there, be sure to smash that like button and subscribe. While Warren Buffett and Ron Barron are often mentioned when discussing successful investors, another name that has been making headlines in recent years is Ark Investment Management LLC's Cathie Woods, founder, CEO, and chief investment officer. She is well known for being an innovative pioneer in the field of stock investing, particularly in the field of disruptive technologies. While Cathie Woods has been in the investment industry for almost 40 years, it wasn't until 2020 when her Ark Innovation Fund returned nearly 150% that she began to gain widespread recognition. Woods' reputation as a tech and innovation investor was bolstered as a result. The Ark Invest asset management firm she founded is famous for its forward-thinking investments in cutting-edge industries like robotics, genomics, AI, blockchain technology, and green energy, all of which are areas where the wagers have been placed. So what else does Cathie have to her name? Well, for one, she has been known to make bold predictions about what the future holds, and she is an advocate for both Bitcoin and the idea that Tesla is currently very cheap. Someone estimates that Woods' future value will be $3 trillion, hence the material has gained notoriety among investors. Forbes recognized her as a power woman in a 50 over 50 power woman for the years 2017 to 2021. The same year, she spoke at the World Economic Forum and was honored by Bloomberg and Fortune. She also attended the forum. As of early 2018, Cathie Woods was worth an estimated $250 million, while Ark Invest assets were valued at over $60 billion. For what reason does Cathie Woods have such a soft spot for Tesla? Because of this, Cathie Woods, Ark Invest, and others employ a thematic investment approach. Rather than focusing on individual firms or industries, or on trying to make quick profits, a thematic investor looks at the big picture to determine where the money should be put to achieve the best long-term results. Even if the underlying technology isn't mature, thematic investors look for ideas with the potential to transform the world. In two respects, Tesla is a perfect fit for this category. First, the organization is consistently developing innovative technologies and products. To prepare for the future, Ark Invest seeks out businesses with varying capitalizations, geographies, and other characteristics that can provide stable support. Therefore, many of Woods' stock recommendations and the firms she invests in for Ark's funds are those that are developing and deploying innovative technology and approaches. Genomics is Woods' personal favorite, but AI and DNA sequencing are also on the list. Storage of power for robots, details for blockchain's operation, automated driving, and 3D printing are some of Tesla's many features. Businesses at the forefront of technological change are supported by Cathie Woods' Ark Innovation Fund. This encompasses not just autonomous vehicles, but also software engineering, automation, robotics, blockchain, and more. The Ark Next Generation Internet ETF is a great option for those interested in investing in blockchain-related businesses. Synthetic intelligence, wireless devices, and computer safety, the autonomous vehicle market, robotics, energy storage, space travel, and 3D printing are all areas of attention for the Ark Autonomous Tech and Robotics Exchange Traded Fund. Following a recent decline in Tesla stock price on Wall Street, the business's three funds were able to increase their holdings in the company. The second week of November saw 27,594 shares purchased by Ark Innovation's ETF, 2,909 shares acquired by the Next Generation Internet ETF, and 9,173 shares acquired by the Autonomous Technology and Robots ETF. The companies that make up the bioinformatics sector of the Ark Genomic Revolution ETF are engaged in stem cell R&D, plant biology, and specific therapeutics. On the other hand, the Ark ETF for fintech innovation provides easy access to capital, performing a transaction with blockchain technology modifications to the risk assessment and funding processes for seasonal, user-specific platforms. And finally, companies active in various aspects of space exploration, such as aerospace, are targets for investments made by the Ark Space Exploration and Innovation ETF. Manufacturers and developers of orbital and suborbital spacecraft and related equipment and vehicles. Both Tesla and SpaceX have benefited greatly from Ark's investments. The concept of Tesla is not brand new. True, Tesla, however, is one of her most valuable investments, and Wood has released a publicly available methodology for estimating the worth of Tesla shares at no cost. Ark Invest has done extensive study on one of its key holdings, and the company believes that this methodology will make that research more transparent to investors. The company has revised its expectations for autonomous driving on hills and its analysis of Tesla's performance for 2022. Model results are used to project future capital efficiency in terms of cost and return through the year 2026. Tesla's target pricing from Ark is $4,600 by the year 2026. But according to data compiled by Tesla, there is a 25% possibility that the stock will be valued at $2,900 in 2026 if things go poorly, and $5,800 if things go well. The cost of capital for each extra unit of capacity at Tesla has decreased from $84,000 to $71,100, which is a positive development. According to Ark, Tesla will pay $6,000 to $8,000 on each extra unit of capacity in 2025, while the company now estimates that it will spend only $2,000 to $7,000 in 2026. Keep in mind, though, that the stock split in August occurred after the publication of this research report. During that time, our estimates put Tesla's share price at around $891. From 2018 through 2026, the robotaxi division is projected to account for over 50% of Tesla's EBITDA and 62% of the company's enterprise value. Based on projected sales volumes, 57% of Tesla's 2026 revenues would come from electric vehicles, while 34% will come from the robotaxi market. In the year 2026, if 10 million units are sold, the company's market valuation will be $3.3 trillion. The share price will be $2,900, and the company's revenue would be $372 billion. The compound annual growth rate is 24. In the optimistic scenario, the corporation would have a market worth of $6.7 trillion, a share price of $5,800, and $513 billion in revenue if it sold 17 million units in 2026. Cathie Wood is well known to be an avid and consistent Tesla fan. The stocks or bonds of the corporation have been thoroughly analyzed by investment firms like Ark Invest. Additionally, the state of the economy and the stock market is considered. Analysts and investors continue to keep a close eye on Tesla shares. Investors are still eager to acquire Tesla stock despite volatile prices. When it comes to electric vehicles, Ark Invest is confident that Tesla will maintain its dominant position in the market, especially if it is the first firm to successfully implement autonomous vehicles on US roads. According to Cathie Wood, we are starting to believe that by 2026, Tesla will not only have the largest percentage of the market for electric cars, but also 20 to 25% of the market for all cars. The production method used by Tesla is rumored to be the envy of the company's main rivals. Famous automakers like Volkswagen Group have publicly stated that Tesla is the benchmark in the industry. A more streamlined production method means lower cost and higher profits in this sector, and as of the third quarter of 2022, Tesla's gross profit margin of 27.9% was the highest of any automaker. Furthermore, Tesla is a frontrunner in the development of software for autonomous vehicles, a sector that could be valued at more than $2.1 trillion by 2030. The release of the company's fully autonomous robotaxi in 2024 gives it a chance to regain the market lead. A lack of available real-world data means that this technology may take years for other automakers to crack. Demand is so high for Tesla's other operations, such as home solar power generating and storage, that the company is struggling to keep up. In its annual Tesla AI Day presentation, the company announced progress on a system that can be a potential game changer in the robotaxi industry. It has been speculated that Tesla's model will operate independently of humans, which has the potential to completely alter the transportation sector and render logistical companies obsolete. Cathie Wood may or may not be correct about Tesla, only time will tell. We do know that Ark Invest is placing a large wager on Tesla's future, and that investors appear to have faith in Cathie Wood's predictions. Subscribe to this channel and smash that like button if you want to get utterly blown away by additional content about Tesla stock. Thank you for watching, and we'll see you on the next video.